What's up traders, it's xVyperTv and welcome back to the channel. Now, tell me if this sounds familiar. You spot a clean breakout, strong candles, momentum looks solid, you jump in and within minutes, price reverses and stops you out, leaving you wondering what just happened? Or maybe this, price suddenly drops or spikes fast, just enough to hit your stop loss. And as soon as you're out, it moves exactly in the direction that you wanted. If that sounds familiar, then you've experienced a liquidity grab. And today I'm going to show you how to spot these moves so you can stop getting caught in them. We're breaking down what stop hunts and liquidity grabs are, and how to use price action, cumulative volume delta, and footprint charts to stay ahead of the traps and trade with smart money and not against it. So if you're ready to start trading like a pro, smash that like button and let's get started. Now, before we get started, this video is for educational purposes only. I am not a financial advisor, and you should definitely trade at your own risk. Now, what really are stop hunts and liquidity grabs? Stop hunts or liquidity grabs happen when price pushes beyond a key level, like a support, resistance, or swing high or low, to trigger stop orders sitting there. But let's clear something up. These aren't the market trying to trap you personally. They're engineered moves to fill large orders at areas where liquidity is stacked. Sometimes a large institution is protecting a position at that location. And at times, what feels like the market hunting your stop loss is often just a larger time frame player active at that level. And here's the kicker. Sometimes those liquidity grabs run out of steam. Buyers or sellers can't push price any higher or lower. That's when we see powerful reversals. Now we'll go into the classic stop hunt trap. Price approaches a key level slowly, swing high or low, supply and demand zone, or initial balance extreme. A breakout occurs, often sharp or impulsive. Stops are triggered, liquidity is filled. Price reverses and runs in the opposite direction when the larger order is filled or the move loses steam. Now this is what to look for. Wicks that pierce levels but close back inside structure, fast spikes with no follow through, and reclaims of levels after the stop run. Now we're going to go into how to use CVD or cumulative volume delta to spot liquidity grabs. CVD, or cumulative volume delta, helps you see aggressive buying or selling and whether it's real or just noise. Now we'll go into what to watch for during the liquidity grab. Price breaks at high, but CVD shows little buyer aggression, likely no fuel behind the breakout. Big CVD spike, but price fails to move higher, equals absorption or a trap zone. Same at lows, large sell aggression, but no new low is sustained. Reversal risk. You can also use footprint charts to spot liquidity grabs as well. Footprint charts show the actual bid-ask volume at each price. Signs of a liquidity grab: large cluster of buy orders at a high, but price stalls or reverses. Large sell imbalance at a low, but buyers absorb and price snaps back up. So when you see these footprint signals lining up at key levels, it's your clue that liquidity has been grabbed. And now it's time to look for the confirmation that the reversal is setting up. But don't jump too early. Wait for the market to show its hand. Now we're going to go into how to trade liquidity grabs smartly. Don't chase breakouts. Wait for the reclaim after a stop run. Confirm with change of character, break of structure, candlestick patterns, CVD, or footprint signals. Place your stop beyond the liquidity grab wick. Example, price spikes above a swing high. CVD doesn't confirm, footprint chart shows absorption, so we short after the reclaim and place the stop above the wick. Example 2, let's say price slams down through a major support level, triggering a wave of stop orders. On the footprint, you see heavy sell imbalance, but buyers quickly absorb it and price snaps right back above the support. That's your signal. Instead of chasing the short, you look for confirmation and consider going long, riding the reversal as trap sellers scramble to cover. Whether it's highs or lows, the key is to stay patient. Let the liquidity grab play out. Look for confirmation and position yourself on the side of real strength, not the side that just got trapped. Here's the truth. The market isn't out to get you. What feels like stop hunting is really larger time frame traders or institutions working their positions. Your job is to learn to identify these moves quickly so you can exit your trade for a small loss before the damage is done, or use these moves as an entry signal in the intended direction of price. When you shift from being targeted to understanding what's really happening, you take back control. Now in the next video, we're breaking down CVD divergence, how to spot when price and cumulative volume delta are giving opposite clues, how to identify trap traders, and how to use these divergences for precision reversals. Now, if this video helped you see liquidity grabs in a whole new way, hit that like button and subscribe for more smart money trading insights. And comment below, how have stop hunts affected your trading? This is xVyperTv. Thanks for watching and happy trading.